Hi guys, welcome to another video of candlestick series. So in this video we will be seeing a dual candlestick pattern called piercing line and dark cloud cover. So let's get started. So this is the next type of dual candlestick what we're gonna study. It is more or less both of them are same. One is for bullish reversal, other one is for bearish reversal. So for the bullish reversal it is called piercing line, and for bearish reversal it is called dark cloud cover. As I said, the name does not matter. What matters is the pattern. So let me just explain you for the bullish one. So let's just say there's a market which is in a downtrend, and then after a bearish candle, what will happen? The next bullish candle will open with a gap down, will open almost below the close of the bearish candle, and then will travel up and cover at least 50% of the body of the bearish candle, and from there the market will reverse. So if you don't know what is bullish candle, bearish candle, body wicks, so you can watch my previous videos. So what will happen, as I said, the market will be in a downtrend, and after a bearish body has formed, the bullish candle will first open with a gap down. See, you see that the body had closed here, so it opened here, it closed here. So the next candle should have ideally opened here, but what happened, it opened with a gap down, and then it covered all the way up and covered almost 50% of the body of the bearish candle, and from there the market reversed. Same thing happens in dark cloud cover also. So the market will be in uptrend. After the bullish candle, a bearish candle will be formed. It will open above the close of the bullish candle, and then it will travel all the way down and cover 50% body of the bullish candle, and then it will go down. Yeah, so you can see that the body, this is the open, this is the close. The candle should have opened here, but what happened, it opened with a gap up. In the case of dark cloud cover, it opened with a gap up, and then it went all the way down and covered 50% body of this bullish candle, and the market reversed. So these two type of candlestick pattern are also reversal candlestick pattern. So generally after a bearish candle, after a bearish trend, it will reverse the trend and it will go to a bullish trend, and from a bullish trend it will reverse the trend and go to a bearish trend. Yeah, so let's see some examples. You can see here the market was in a clear cut downtrend. After the downtrend, the bullish candle opened with a gap down and traveled all the way up and covered 50% body of this bearish candle, and from there the market reversed and started going up. Yeah, you can see that the bearish candle opened here, closed here. The candle should have opened here, but what happened, it opened with a gap down here and traveled all the way up, covering almost 50% body of this bearish candle, and then from here the market reversed, and it took off for the uptrend. Yeah, you can see here also another example. The market was going down, 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 and from after this bearish candle, the market opened, the next candle opened with a gap down and traveled all the way up, covering almost 50% body of this bearish candle, and the market reversed from here. Here let's just see some example for bearish. So here you can see a bearish example. So the market was in uptrend. After this bullish candle, the next bearish candle opened with a gap up. See, there's a minute gap up here. It opened with a gap up and traveled all the way down, covering almost 50% of this bullish candlestick, and then it went all the way down. Yeah, so this is known as dark cloud cover. Yeah. So I hope you understood something out of this video today, and if you learned something, please like the video and subscribe to my channel. And if you have any doubts or any queries, please drop it down on the comment section. Yeah, thank you for watching.